Welcome back to Clear Skies Retirement with Jay Kirkwood at Secure Financial Management. This is a show where we introduce you to Jay and how he helps people with retirement, but it's also a show where we talk about the issues of retirement and some of the things that you might be wondering about and concerned about. Let's just get it all out on the table there and see what we can do about helping you build a plan that you're confident in so you can go into retirement and spend freely and enjoy your money in retirement. And Jay, one of the things that kind of gets in the way of that are the headlines. A lot of times they're very scary out there. We just went through Halloween, and it's been a little bit scary. Warren Buffett has this indicator out there that if U.S. stocks, if the total value of U.S. stocks to GDP is out of whack, I don't know how it all works out formulaically, but it flashes red. And apparently during the 2000 tech wreck, Warren Buffett's indicator was flashing red and the number was 175. Well, today the number is 217, which I guess is worse. So I don't know. I don't know what all this is about.
I guess, right?
Yeah. But anyway, there's still, there's a lot of people say this market, it just keeps going up and up and up, and it just can't go up forever. Gold prices are going through the roof. That's weird. There's a lot of people that are living on credit card debt. There's unemployment is going up. They think inflation is going up. I know the market is going up, but there's still undertones of just don't know about all of this. So is this coming up with some of your clients? Are they coming in a little bit uneasy? Do they think they want to make tweaks to their plan? Or what are you hearing from your clients right now in relation to all that kind of news?
Yeah, people have felt this way for the last 12 or 18 months. Mm-hmm. It's not just now, right? And let's talk a little bit about this in kind of several different aspects, right? The market hitting new highs is nothing new. It's been hitting new highs for decades. Otherwise, we wouldn't be where we are, right? Mm-hmm. Obviously, you've got to keep hitting new highs. So if you're in the 90s and the market was on a tear, we're hitting new highs. Well, if you'd gotten out then and done nothing, how many hundreds of % of returns, right, would you have missed out on? So every time you hear CNBC or Bloomberg or whoever it is talk about, it's a new market high. Yeah, that happens all the time. Otherwise, the markets would never grow. Mm-hmm. So let's kind of put that aside. I wish I knew a little bit more about what was behind Buffett's indicator, because the truth is there's so many different indicators that you can use. We look at more technical stuff like a price to earnings indicator, and that's a bit high as well, right? Mm-hmm. Now the question is can these companies that have high PE ratios, what I call basically how expensive is a stock compared to how much their earnings is, how profitable they are, can they grow into that? This is always going to happen with a new wave of technology or a new element to the economy. It kind of gets ahead of itself. Now, a lot of people talk about Buffett, and you would be foolish, I think, to go against what he says. He is a very different investor and has a very different profile and investment strategy than any of we do. Okay. So it's not uncommon for him to be sitting on billions and billions and hundreds of billions of dollars just waiting for an opportunity to arise. And his criteria is quite strict. He's basically a value investor. He looks at a company and says, is this a value investment? He hasn't found one, so he just stays in cash. Most people listening to this, including us, Randy, do not have a few $100 billion that we can sit on the sidelines.
Otherwise, we wouldn't be
just
here.
Live off the interest and wait, right?
Right.
So it's interesting as a talking point. It's interesting as an indicator, but more than that, it tells you why you should have a plan that is not 100% dependent on the market.
And that is one of the things that we have to decide as we sit down with you and say, I'm not really a wheeler-dealer investor and somebody who buys stock and ETFs and all this kind of stuff. I've just been packing money in my 401k. But my 401k has been 90% stock and 10% bonds my whole life. And now they tell me that's not where it should be. So I have to come to a decision on, Is it a percentage? Do I have to come to a decision on, or how do I figure that out? How much I want in that stock market?
The first thing we start with is a risk assessment, right? We need to go through, get feedback from our clients as to how do they feel comfortable investing. Mm-hmm. That's a jumping off point. And it's a normal process that when you go from work life to retired life, that risk assessment, it changes. You may have been a very aggressive investor in your working years, and hopefully you were, because you've done very well in the markets if that's the case. You also weren't needing to live off that. You also had a longer time horizon before you were going to need to access, and now you're at that point. A lot of different factors going in. The second thing is, now that you actually have the opportunity to take the money out of that 401k, your options can go from whatever you've got in there, 10, 15, 20 different options to invest in, to like 10,000 options. Mm-hmm. And that's probably more of what you need when you're getting towards retirement. You probably don't need only the options of equities or bonds that you have in that traditional 401k. You need to be adding other elements to that investment allocation to serve the different stage you are now in life.
Gotcha. So as we move into retirement, we all know that the big discussion that our risk profile could change or should change. Now let me ask you, during retirement, should our risk profile change? As these headlines come and go, as the economy goes up and down and ebbs and flows, does the retiree, do they say, okay, Jay, I'm hearing bad things, let's move a little bit more toward the conservative side? Or everything seems to be roaring, let's push a little bit toward equities. Does that happen for people in retirement? Or is it more of a, I hate to use the term, set it and forget it?
Yeah, it's definitely not set it and forget it on our end, but it's also definitely not chasing whatever the last thing is that you saw. Okay. And we've talked about this before, and it's so relevant to this conversation of the markets possibly being at, a peak, and could there be a drawdown in the markets? This year has not been without its volatility, right? We only have to go back to late March, early April. And it's a good time to be having a reset and a new discussion on a couple different topics. What is your real risk assessment? Because this is the issue that happens when the markets have been like they are. Yeah, we had a down market in 2022. 2023 was great. 2024 was great. 2025, thus far, right? Mm-hmm. Hanging in there, pretty good. And it's very easy to say, I'm a very aggressive investor. I'm fine with the market ups and downs when there are no downs, right? It's easy to say that you're very comfortable with it when there's no downs.
Right.
Now, what really gets shook out is when we do have volatility and people have to really realize the risk that they have exposed themselves to and that they're really not that aggressive.
Yeah.
Right. An unfortunate story and a frustrating story really on our end, but a great illustration of what I'm discussing. Okay. We had a client, he's no longer a client because, we kind of had the discussion that we need to part ways because we can't help you when you make decisions like this. Right. So it was nice guy. I'm an aggressive investor. And no matter how much you try and talk people down, some people have decided that this is the profile of who I am. I'm an aggressive investor. Like, okay, bud. So we'll go with that. Well, he was an aggressive investor in 2023 and 2024. And like I said, it's easy, right? When the market's going up to say, I can handle all this risk until something like March, April of this year happens. It was a tough one. We were down, whatever it was, 12, 15% in a matter of a handful of days or a week or so. During that time, he's aggressively invested, and we have that down 5% day, and he calls in and he talks to one of our advisors and, hey, I want to get 50% out of the markets, and try and talk him out of it, or say, well, we can reduce a bit of risk. Maybe we don't go that extreme. No, this is what I want. Okay, fine, we'll do it. Well, the next day, the market's down another 5%. And I think that was a Friday, and then he calls again the next week, and the markets were down, not as much, right? But they were still kind of trending in that direction. And this is somebody who would not diversify out of the markets, would not pick up any guaranteed income, would not look at other asset classes because he had this high risk tolerance, okay? Hadn't really accepted that he had gone from work life to retirement life and things needed to change, right? And so it was Monday or Tuesday of the next week, he calls and I talked to him personally. And he said, I want to get 100% out of the markets. I must have spent an hour on the phone with him trying to talk him off the ledge. Hey, maybe we just take a little bit. It's dangerous to get out of the markets completely. This is a rough patch. I get it. Nobody likes it. Anyway, the typical conversations, right? No. Like, he made up his mind. Okay, like, we'll go ahead and we'll do that. So he's 100% out of the markets at this point. The next day, this is all tariff related, right? All the volatility is from the tariffs. The next day is the day Trump says, 90-day pause for everybody, and the NASDAQ is up 12% in one day. He will never recover that money.
Yeah.
Never. Yeah. He's down in the hundreds of thousands, and this is what makes it even more difficult, right? I don't know what he ended up doing with that money afterwards, because what are we going to do? How are we going to help somebody like that, right? I can tell you probably what happened. The market took off, and now it's, well, I can't buy in now because it's gone too high. And what's it done since? It's gone up another 10 or 15%. So now it's not only the insult of locking in a 10 or 15% loss, you never recovered it and you missed out on the next 10 or 15% to the upside. It's decisions like that that can undo a retirement and cause a situation that can never be fully recovered from.
Yeah. So my question is, do you move your risk profile in and out as you go through retirement? This is the danger of it, and you become a market timer. And you might get lucky once, but are you going to get lucky twice? You got, if you know when to get out, do you know when to get back in? And I mean, all those questions are there for you. So sometimes it's good to settle on who you are, put together that plan, and then ride out some of these difficult times that we have in these markets. You're listening to Clear Skies Retirement with Jay Kirkwood at Secure Financial Management. Online, it's retire210.com. If you're worried about markets and you don't know where you ought to be, how much of your toe do you want to dip in that pool and in your retirement years? Maybe it's not very much at all. Maybe it's nothing at all. That's okay. We'll figure out what we want to do, and we'll figure out a plan for you as well. Retire210.com, or give Jay and the team a call. 210-985-6200. 210-985-6200. All right. Now, Jay, I don't know too much about your family. Did you have older brothers, younger brothers, sisters? Tell me about the makeup of your family when you were growing up.
Older sister, younger brother.
Younger brother. All right. Did you ever fight it out with your younger brother? Because younger brothers usually get into wrestling matches, and somebody gets into a headlock somewhere along the line. Were you the guy?
There's a couple of those.
Were you the guy who put your younger brother in the headlock and said, "Say, uncle"? Are you that guy?
No comment.
All right. Well, I think it happens to most of us, whether it was in school or with the family or with the cousins, whatever like that at the family reunion. Somebody got into a headlock and was going noogies and say, uncle. Well, then they were supposed to let you go, as you said, uncle. Well, there's another uncle in retirement that we're worried about, and that is Uncle Sam. And in many cases, he puts a headlock on your 401k and on your money sometimes. And he won't let go if you yell uncle. So let's talk a little bit about that. You've talked about the importance of a tax plan. So many of us are coming into our retirement with a 401k, with an IRA, with these things that are tax deferred. There's a tax bill when we take out our money. And that can be a shock to people sometimes, because that $1 million that I thought I had is really only $700,000. So talk to me a little bit about that discussion.
We had a client in the office that just retired. They just become a client just the other day. And she said, man, and we were talking about the tax issue, because she's going to have tax problems that we need to plan for. We need to get ahead of it before of RMD age. And she said, man, I've worked for decades and paid into my 401k and paid off my debt. And, you think they just leave me alone at this point? It's like, yeah, that's not how it works. No. In fact, you're one of their favorite people now because you have this big 401k that they're rubbing their hands together, waiting to get their claws into, right? Mm-hmm. And for the people we work with, at least, right, this is the biggest area of opportunity most of them have to optimize their retirement, right? Doing it in a tax efficient manner. We've been doing the tax planning for 8 or 10 years for clients. And I really believe that the advisory firms or the wealth management firms of the future that thrive into the future are going to be the ones that pivot to also incorporating tax planning. Because, I mean, I don't even know what it's up to now, but there's trillions of dollars in 401ks and pension funds that the vast majority of it is tax deferred, and the vast majority of it is going to be exiting those funds in the next 15 to 20 years. The government can't wait for it. I mean, they're strapped for cash all the time, right? They can't wait for it. So they're there waiting to get their hands on it. Our biggest area of opportunity with our clients is, look, can we not pay tax on it? That's not realistic, right? Can we minimize and hand over as little as possible? Yeah, we should have a plan for that. Absolutely, absolutely vital. And that's assuming we stay in these tax brackets that we're in right now, which are some of the lowest we've had in a long time. You only have to go back to the 70s and 80s to see these top tax brackets that are significantly higher than what we have now.
Yeah, my mom had a CPA, and he had in his office, it was framed, the tax brackets in the 1940s. And some of them were like up at the 90 percentile. I think that was why Ronald Reagan said, I only do 3 movies a year because after that I get above this threshold and I'm not making any money. So, yeah, it could get much worse, folks. And as we go through our retirement, those laws seem to change all the time. And our government really is hungry for our money. That is true. And to know that there's a big pot of money there in 401ks is going to be pretty tempting for them. You're listening to Clear Skies Retirement with Jay Kirkwood at Secure Financial Management. Online, it is retire210.com. Retire210.com. Take a look at that page down at the bottom there. There's a place for you to put a little information in there. And then Jay and the team will reach out to you and say, okay, what are you concerned about? What are your worries? How can we help? Maybe we sit down and really kind of go to it with a pencil and paper and say, okay, what have you saved for retirement? What do you want to do in retirement? How can we put those two things together? That's what it is to sit down and have a meeting about your retirement. Again, retire210.com or 210-985-6200. That's a no-cost, no-obligation meeting. All right, so I've been doing what I've been doing right now for about 10, 12, 15 years, something like that. And Jay's been at this a lot longer than that. And what's interesting to me is I sit down and build these shows and say, okay, let's talk about this today, is the headlines. And the headlines have changed over the last couple of years. Annuities used to be the work of the devil. Everybody hated annuities. Now, all of a sudden, annuities are selling in record numbers, and they are a viable source of income, including with people like BlackRock. They're all about the market. If you looked at a list that said this is what you need to do for retirement planning, tax planning hardly ever made those lists, and now it's on every single list. And your 401k was the savior for the pension. And now all we do is we talk about the fees and the taxes and the limited choices. And now it's kind of some of these topics, Jay, have gone completely 180. It's completely changed. What has changed that these things are now viewed differently in the financial world?
The biggest thing is that the people that have most of the wealth, which is your generation, right? The boomers,
right? The boomers, right?
Their needs are changing, okay? If a client was 35 or 40 and you recommended an annuity to them, I would have significant doubts about whether that was the right recommendation that was made to that person, or was the advisor just trying to make a sale, right? And get the biggest commission possible for them, right? Probably not. Like, what do you want to be doing in that? Keep your debt as low as possible. Get as much money into your 401k. Maybe some of it's Roth money, but maybe it's not all pre-tax. Take the risk in the market. You're young. You've got 30 years to retirement. You should be doing that. Do you need something that has no risk and lower growth that you get for no risk? Probably not. So the people that have kind of accumulated that money, now their needs are changing. We talk about going from work life to retirement life, right? And that is a different set of needs and a different set of tools, I guess, if you want to call it that way, that we're going to need to get through that retirement. Now, let's focus in on annuities specifically, right? The reason annuities also have a bad name is for a couple of reasons. Well, there are some bad ones. That's just the way it is, right? There are some bad ones out there. And this annoys me personally because this is my profession, a certified financial planner. I've done it for decades and built a business in it and committed to that industry. And you get people that are essentially insurance salesmen that call themselves financial planners or financial advisors, and they're just there to do a transaction, sell that annuity, and you never see them again, right? So they've developed a bad reputation for certain reasons. If you understand truly how they work, how they can provide a certain need that you're going to have in retirement, they can be great. What's interesting about it, right, is, typically we'll start with a risk tolerance discussion, and an annuity may or may not be part of the conversation we have, depending on that. And usually the client is the person who brings up an annuity. We don't really bring it up. They'll usually bring it up and say, well, I've heard annuities are really bad. Like I don't know if I should do that. And I was like, okay, well, we can talk about it or not talk about it, whatever you prefer. And I say, do you wish that you had a pension where you work because you didn't have a pension? Like, yeah, my friends worked for the government maybe, right? And they've got a pension. When my parents worked, they had a pension. So, all right, your Social Security is going to be $2,500 or $3,000 or whatever it's going to be. Would it make you feel better if that was higher, right? If more of your income was coming from that sort of a source? Yeah, it'd make me feel way better. Like I don't have to worry about the markets going up and down. And I said, well, those are annuities, right? A pension through an employer is an annuity. A Social Security is an annuity. Annuity is just something that pays you for the rest of your life. And most people don't even know that. Mm-hmm. Mm-hmm. And so does it serve a purpose in your plan? Maybe, maybe not. Get educated on it. Find somebody who is not, come and see us if you want. If you don't want to see us, find somebody who is not an annuity salesperson. Find somebody who is a certified financial planner that can go in any direction you need. Maybe an annuity is one of them. Maybe it's not.
You're listening to Clear Skies Retirement with Jay Kirkwood at Secure Financial Management. We're talking about the change in the direction on some of these headlines and how it used to be one thing was bad, now it apparently is good. Well, now this was as good, now it's bad. I mean, things change. And I think, Jay, isn't it the realities of retirement have really set in? People are moving into retirement and say, okay, now I'm here. Mm-hmm. What do I need? And they're finding out that they're coming up short in certain ways. I mean, we have a lot of military in our area in San Antonio, and a lot of these people, mm-hmm. they'll do a hardship tour. They'll go overseas, and they probably do all the research they possibly can, and then they get to Okinawa, and they realize, okay, this is what it's like to live in Okinawa. and the reality sets in, and you figure out, okay, I got to do this and that and this and that in order to make my life better. I think it's the same thing with retirement. People are saying, I need more income. I've got a tax problem with my 401k mm-hmm. And all these things. And they get there and they say, okay, financial advisor, help me through this. And I think that might mm-hmm. have something to do with why some of these headlines have changed.
Yeah, it's a complete 180 in mm-hmm. life. And a phrase I hear over and over and over again from clients is, now that I've retired, I don't know how I had time to work before because I'm here doing this, I'm here doing that.
Yeah.
I'm working with you to make sure I'm invested the right way. My plan's on track. We're dealing with the taxes. And it's a good thing I retired because now I've got this job of retirement as well.
Mm-hmm. Well, we would love to help you with that job of retirement. That's going to be something what you're going to be doing for the next, hopefully, 25, 30 years. You want to enjoy it. You've been saving all these years to get there. Let's make sure that the money's there with the things that you want to do, and you can spend confidently in your retirement years. That takes a plan. And if you go to the website, which is retire210.com for Secure Financial Management, retire210.com. You're going to see the Get Me to Retirement 5-step process. And what it really is let's meet, let's talk about what you want to do, let's figure out what you've done, and does it all go together? And if some things are working and some things aren't, let's identify those and see if we can get them working for you. Again, retire210.com or 210-985-6200. 210-985-6200, the number. Set up a date on a calendar, and let's get talking and putting some pencil to paper on your retirement. And remember to have this podcast delivered straight to your favorite podcast platform by hitting like, follow, or the subscribe button. Thanks again for listening to Clear Skies Retirement, and we'll see you next time.
Investment advisory services offered through investment advisory representatives at Secure Financial Management, a registered investment advisor. Exposure to ideas and financial vehicles discussed are not designed nor intended to be applicable to any person's individual circumstances. It should not be considered as investment advice, nor does it constitute a recommendation that anyone engage in or refrain from a particular course of action. Past performance is not a guarantee of future results. Investments can fluctuate, and when redeemed may be worth more or less than when originally invested. Financial professionals are not licensed in all 50 states. To find out if Secure Financial Management is licensed in your state, please contact their office. Secure Financial Management is not affiliated with nor endorsed by the Social Security Administration or any other government agency. Annuity guarantees rely solely on the financial strength and claims-paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Wholesalers Insurance. Jamin J. Kirkwood, Texas Insurance License number 1421850.